Hey everyone, so today I wanted to make this video to show you guys that it is definitely possible to make money in the stock market. So I hope that this video helps you in your investing overall, and really just want to show you how I made my first $500 investing in the stock market. And so this is the portfolio holdings that I have from one of my investment accounts online with Fidelity, and I downloaded this spreadsheet and basically gives you the breakdown of how I earned the $500 of profit in 1 year. So as you can see here on the left hand side, I have a variety of ETF funds. Each one is a little bit different. I have a bond ETF, I have a real estate ETF, I have different sector ETFs like consumer, industrial, financials, I have technology ETFs, and I have a lot of S&P ETFs, small cap, mid cap, and large cap. And I recently started to invest a little bit more internationally, so I have this total world stock market ETF as well. So the point is that you can simply diversify. You don't have to put all your money in one basket, and you can simply diversify by buying these ETF index funds. They're passively managed, and as long as they have low expense ratios, they're really easy to buy and invest in. A lot easier than to do your own individual stock picking. And the reason why I like these better than mutual funds is because mutual funds have a higher expense ratio because you have active management from portfolio managers who are trading these stocks inside the mutual funds, and that cost, it costs more money to maintain a mutual fund. So you're probably better off just investing in passively managed index funds, as Bernie McKeel from Random Walk of Wall Street suggests that you do anyways, right? So again, I've had this portfolio for about 1 year, and as you can see here, there's a total and gain lost dollar, and I simply added the positives and subtracted the negatives, and I got a total of $516 for the year. And so my initial investment was $5,266. And once I add my profits, my total account value is now $5,783. And my overall rate of return is about 10%. So I'm really happy with this result. And because, if you think about the history, since the early 1900s, the S&P 500 index has averaged a 10% rate of return. And so the fact that I was able to get this rate of return, even while I was holding bond, real estate ETFs, I'm just really happy to achieve these results. But obviously the stock market has been at an all-time high, so this could easily drop down to 6% by the end of the year. Who knows? But the point is that if you diversify and you invest in a variety of different asset classes, you can minimize the risk, right? So instead of putting all your money in the S&P 500, if the S&P 500 takes a dip 1 year, that doesn't necessarily mean that bonds will take a hit. So sometimes each different sector and each different industry will have a different response to how the market reacts. So by diversifying, you minimize the risk, right? So I hope this video was helpful, right? So look into index investing. Make sure you diversify your investments and invest. I use a strategy what's called dollar cost averaging, and I can spell that out for you basically. So it's just dollar cost averaging, and basically I try to invest the same amount of money each month, no matter what the stock market's doing. So for example, in my 1 year of investing, I invested $5,266, but I really invested this on a monthly basis. So what I did was, you can just grab that total and divide it by 12. So I invested about $438 on a monthly basis, and yeah, I was able to get a 10% rate of return, and that's my total gains. So it'll be interesting to see how the market reacts next year. So anyways, I hope this video was helpful. Please let me know if you have any questions or comments down below in the description box, and subscribe to my YouTube channel for more upcoming videos on investing. Thanks and have a great day. Bye.